If you're watching this video, congratulations and welcome to the Billionaires Club. That's right, this video is for billionaires only. If you're not a billionaire, please close the video right now or I will tell the Illuminati on you. Are they gone now? Okay, good. Now that it's just us, I'm going to let you in on 5 methods we as billionaires use to avoid paying taxes. If you want the other 600 tax avoidance strategies, consider buying my super secret course on how to pay 0 federal income tax for life and maybe even boost your testosterone. Taxes are annoying and we shouldn't have to pay them. And you might be asking yourself why, to which I would reply, are you really a billionaire? Hey, I thought I told you poors to get out of here. I thought I smelled the stench of the working class. Okay, I think that was the rest of them. Now on to business. Us billionaires create jobs and all we ask from society is to pay as little tax as possible. We think that's a fair trade and coincidentally, so does our government. So here's the first strategy to avoid tax. This one is an oldie but a goodie. The IRS, in its infinite wisdom, decided that income from labor should be taxed at rates higher than capital gains. I mean, I'm not complaining. So when your stocks, real estate, etc. appreciates in value and you wait at least a year to sell, your tax rate is only 20%. And dividends are taxed at the same rate. Contrast that with a top marginal rate of 37%. Come on, man, that's a no-brainer. This is why comrades like Jeff Bezos only take a salary of $80,000 a year and the rest of his compensation in Amazon stock. Jeff is a real alpha. Alright, this one is a bit of a troll by the IRS. But hey, we don't discriminate against tax avoidance strategies, okay? In fact, this one is a real home run. Alright, let's take a page from our Baldy-in-Chief, Steve Baldmer. That's just a little teasing we like to do. Stevie Boy owns the LA Clippers. In 2018, Steve reported making $656 million, and he paid $78 million for a tax rate of just under 12%. That's a lower rate than the concession stand workers pay. We see you, Steve. By purchasing the Clippers, Steve was able to deduct over time the price of $2 billion against his income. The idea being when you purchase a business, the assets depreciate over time and are considered expenses, and can be deducted from your income. The funny thing is that the team's most valuable assets, being TV deals and player contracts, are unlikely to fall in value. TV networks are not going to cancel those deals, and players aren't going to just stop playing. So even when the Clippers are profitable, Steve can still claim massive tax losses. And when they aren't profitable, he can deduct even more from his income. Now that's what I'm talking about. Okay, I know what you might be thinking. Aren't Roth IRAs for dirty working class people? And yes, they usually are. But we don't care if a provision in the tax code is meant for the poors. If we can take advantage of it, then we will. Our boy Peter Thiel figured this one out. Roth IRAs allow an individual to make yearly $6,000 contributions whose gains are tax-free if not withdrawn until the age of 59. In 1999, that limit was $2,000, and Peter invested just under that amount in a little startup known as PayPal. Pete then used the massive gains from PayPal to make further investments, spending $5 billion worth of gold from $2,000 worth of straw. All tax-free, of course. Nice, Peter. Real nice. And the funny thing is, the average Roth IRA balance is around $40,000. It's simple, really. You already bought the assets, stocks, real estate, etc., and they've appreciated in value. Now, instead of selling those assets and getting slapped with a capital gains tax like some moron, you're going to borrow against them to pay for your yacht the size of a small Caribbean island. When you die, your heirs will settle the debts from your estate. And a little bonus for your budding dynasty is that they will get a step up in basis, meaning their cost basis steps up to the value of the assets when they inherit the estate. And I know what you're thinking. Can't they just do the same thing and pass the tax savings down ad infinitum? And yes, that is correct. Damn, we're smart. Even with all the loopholes, strategies, sometimes we still want to lower our tax bill just as a middle finger to the peasants beneath us. So we get out our checkbook, pull out our Rolodex of senators, and get to work. While the Trump tax cuts were already pretty juicy, our boy Mike Johnson insisted we get a tax break for pass-through entities like partnerships and LLCs. Trump gave us a wink and a nod by proclaiming the tax relief provision was a win for small businesses. Yeah, right. Rather than small businesses, most of the benefit went to just 2 families, Dick and Liz Uline of packaging behemoth Uline Corp., and roofing magnate Diane Hendricks. Truly great people. Together, these two families donated $20 million to Senator Johnson's 2016 re-election campaign. And what did they get in return? In 2018 alone, the Uihleins and Hendricks were able to deduct a combined $215 million from their income. See guys, it's that easy. Well, I'm sure you found this informative. And don't worry, if the laws ever change such that we have to pay more in taxes, you best believe our accountants, lawyers, and generous donations will make sure that never happens.